morning. Good morning, StockTwits crew. Happy FAFO Friday, everybody. I hope you've had a great week. It's been a good one. This market is soaring in all-time highs here. SPY finally did it in free market. We were flirting with greatness on Thursday. Yeah, clap it up. Yeah. We were flirting with greatness yesterday on the SPY. Couldn't quite touch it, but in pre-market here, we are getting that all-time high. So looking good. Obviously, QQQ prior in the week already hit it. So tech has been leading things a little bit, but just overall phenomenal market. Michael Nauss, how have you been feeling? I know you've been very, very bullish for a while now, as well as I. How are we feeling about the market here?
Listen, bull markets are more fun. All-time highs are more fun. I'm glad we're here. Question is, right, can we stick the landing? But we got here, right? There's a lot of people that have to catch up. I think that's obviously a good thing. And we need to see if we can stick the landing there. So yeah, it looks good. I'm just watching it fade a little bit in the pre-market. But yeah, I think there's just so many people that are underwater that, shorted the war news or whatever news came out. And it's probably the most hated all-time highs that I can remember, which is bullish.
Yeah, 100%. We saw Nvidia make new highs as well. Political noise echoed from DC with GDP contraction headlines and a ticking tariff clock. We do have tariffs coming back soon, so that'll be interesting to see if that really affects the market around these all-time highs or not. I know it's been interesting seeing VIX hold up as much as it has with the market being at all-time highs, but with the war and everything going on, it does make sense. But as we hit all-time highs and continue through them, we're starting to see that VIX really drop off. We're now under that 17 and just continuously draining. So that can make things a little tougher for the intraday trading side of things, but really good for the market. So love to see that. Market for now is in party mode, green across the board and optimism in the air. We love to see it. SPY, QQQ, Russell, Dow Jones all closing up yesterday. Sectors 9 of 11 finished green. XLE led things up 1%, almost 1.5%. Real estate XLRE lagged. It was down 0.63%. But we did have some earnings this week. It was pretty dry on the earnings side of things. Earnings season is kind of coming to an end. But we did have Nike report, and despite the negativity around Nike right now, they did well, 2.81%, beat low Q4 expectations, but sales fell 12%, and the profits tumbled 86%. Still, the firm says the worst is over. Again, up 10% in pre-market now. So, yeah, I mean, we are kind of talking about that a little bit in the background before the show started, but they basically came out and said it's as worse as it can be up from here. So I'm curious if you have any thoughts there, Michael.
This is one of those that was just so beaten up because of the whole tariff thing that I think, regardless of what they said, as long as it's not we're going bankrupt, it's probably bullish for the stock. This is again $180 stock that's ripped all the way down to $60. That's pretty substantial, right? So that it's one of those, if you're that destroyed, all you have to say is, we're not going anywhere, and I think the investors will love it. So yeah, you don't have to say a whole lot, I don't think, to get a nice little move in this name.
Yeah, I get you. I'm not a big trader of Nike. I think I've traded it a few times in the past. Not really a name I'm always looking at, but always interesting to see the earnings there. Walgreens reported as well, up 0.62%, showed solid results amid whispers this might be the final earnings report before going private via a $10 billion deal with Sycamore Partners. That could be interesting. I don't know how we performed on that yesterday. All I know is that Walgreens is a forever barcode when you look at that intraday chart. So the volume is just extremely low there. Makes things tough for the trading side of things. But, investors might be liking it. What do you think, Michael?
No, when I've got this chart up, when I look at it, I see exactly. I would have thought just by looking at this chart that it was a buyout or something. Like there's just, there's no movement here. So nothing that would interest me. This is we talk about it all the time. Dead money, almost as bad as losing money, because dead money is a lot harder to make a decision off of. I can just bring up what I'm chatting about here. How frustrating would it be in from from May or from March until now. The thing just
Same
hasn't moved.
spot.
So it's not going down enough to stop you out. It's not going up enough to make any profits. Yeah, to me, it looks like like a merger deal or something, maybe. But yeah, no touch on this one at all.
That's when you got to have a little bit of a time stop on things, not necessarily a price stop. It's like, if this thing ain't
Absolutely.
going in a month, I need to get out of it.
Yeah.
We also had an MKC report. McCormick, they spiced up the day with a quarter 2 beat on EPS and sales, logging its best session of the year. It's up 5.34%. So looking good there. Not a company I know. I don't know if you're familiar with them, Michael,
No,
but
I
a
think I've
nice
probably
move.
traded them. I have no idea what they are,
Yeah.
but food and specialty candy. There you go.
Yeah.
Look at just a mess, right? There's so many names. I compiled a name yesterday. I put it out on Twitter and everything of just here's everything that hit an all-time high yesterday. That was in the Russell 3000. There was like 100 or so names on there. So it's like, why look at, I don't know. For me, when I like, why would I trade this when I could trade one of those? Yeah, just range bound. So we'll see. It might be one of those you start to look at the other ones, right? So if they make candy, as far as we know, right, do you look at Hershey's? Do you look at some of these other brands to see if there's some kind of movement you can have? Because a lot of these were killed after the whole Ozempic thing, right? Where people are gonna maybe eat less junk, maybe.
Yeah.
So
It's funny
maybe.
you mentioned just names that are like not doing much, consolidating, and it's like, why would I want to trade that? That's exactly how I feel about uh, crude oil and platinum,
Mm,
Michael. I I know that it has its moments. There's times where, the cycle's there and it's getting some nice movement. But when you bring up crude oil on a weekly, monthly chart, you bring up platinum on a weekly, monthly chart.
mm.
These charts are in what I like to call like forever consolidation. They're
Yeah.
not trending on those big time frames. When we trade NQ, right, Nasdaq, the S&P 500, those are forever as of now, right, until it changes. They have forever been in this uptrend on a yearly chart on those big time frames. You look at crude oil, you look at platinum, they've forever been in this like consolidation period. And so that's where I'm just like, I know it has its moments here and there, but why would I willingly trade and arguably a harder asset to trade that's not ever really trending, right? I know it has its moments, of course. It's going to pop and drop and have those legs of price action that you can capitalize on. But I find it so much harder to trade something like that when it's on such a higher time frame. It's not doing anything. You know what I mean? I'm curious if you have any thoughts there.
Yeah, well, and they're just different animals entirely. Like the Qs and the SPY will go up, will drift up over time if you believe that the smartest people in the world are going to figure out ways to make more money. That's the whole summary of the stock market, right? If you think, the Bezoses and the Musks and the Zuckerbergs of the world, that there'll be more of those people produced and they will figure out a way to make money, then the stock market will go up. When you're talking crude oil or some sort of metals or something like that, they need to move because there's some sort of supply or demand shock, right? There's no inherent thing that's going to make oil go up over time. It's just a kind of supply and demand equation throughout. So, yeah, for short term trading, fine. What I will say is sometimes the things that are never moving sometimes really rip. And this is why you'll see a lot of these. Um, yeah, Coca. You'll see a lot of these guys who are turtle traders, right? These trend breakout guys. They'll take, because imagine if you bought the breakout on Coca here like 10 times and it just, little haircut each time. And then you eventually end up getting that move where for some reason
Yeah, you
Coca
might have
went from
lost five
3,000.
times, but that sixth time you got it. It really did some big numbers for you.
Right. So it's one of those, if you are trading like a trend following system or something in commodities, okay. But you got to understand that, like you said, 90% of the time, the thing's not going to trend. You're looking to get like a once every couple year kind of trend where, especially if you're limited on capital, again, the Qs, if you just believe that technology is going to continue to advance and they're going to continue to figure out ways to make money off it, the Qs will go up over time, right? It'll have bear markets. We've had like 5 bear markets in the last 5 years, but over time it drifts higher.
100%. Couldn't agree more. Yeah, I just wanted to get your thoughts on that because, like, again, no hate to people that trade oil or, platinum or any of these metals. I just find it interesting. You know what I mean? I come from NQ and ES, where we're always trending. And I'm thinking of it like, why would I ever willingly put myself in that position? But I understand everybody has their plan. I was just, just always raising questions around that because I know for me, it's so much harder to trade those assets. I don't do as good at all.
And there's a different analysis of it, right? So if
Yeah,
you're trading
entirely.
gold or oil or something like that, right, you're not really worried about tariffs and this and that. You're studying like OPEC meetings and like all kinds of, how far people are driving in their cars, and like it's a completely different kind of analysis. So no, for short-term trading, sometimes you get some volatility. For long-term investing, I don't think it makes sense to really include commodities that much, to be honest.
Yeah, I agree. AI pushes market to the edge of euphoria. Nvidia hitting another new all-time high, as
Hmm.
we talked about. Wall Street can't raise price targets fast enough. We love to hear that. Micron followed through after Wednesday's earnings beat, with analysts forecasting even
Yep.
stronger quarters ahead. I'd like to get your thoughts on Micron a little bit, Michael. This thing's interesting. I know we got that earnings ripper, and then kind of came right back in on the next few days. But we're holding that really well. We're holding that gap that we made really well, and just continuously trying to stay above that. So I have some metrics that I've been looking at that don't really call for this thing making a new high, but I'm interested to see what you think here. We're kind of right coming into these highs, a little kind of in the middle of this price action, to be honest. Do you have any thoughts here?
I like this kind of undercut and breakout of the support zone. I think that probably led to this thing higher. I think, right, if you like it, if you're above 112, it looks fine, right? So it's 10% you're risking to the downside to break out. Semiconductors as a whole, I just don't know if this is going to be the place. Look at just such a huge range. Yes, this range could resolve higher, but like when I went through that list of names of companies that were breaking out to new highs, it was things like this this air lease company, and um, RCL, which was Royal Caribbean Cruise Lines. There's a whole bunch of names that were just not in the AI trade that were making these new all-time highs. So I don't know if I ever want to focus on the thing that led the last bull market to lead this bull market. This is kind of what I'm looking at. Like, can Nvidia really double again? Is it going to become at that point, like a $6 or $7 trillion company? Uh, Maybe. I just don't think so. For me, I want to always look at what's the next thing that's breaking out and the next thing that could potentially lead the next bull market. So, yeah, I'm looking more at what's making new highs now as opposed to what was making new highs the last bull market. And I think that's something that newer traders struggle quite a bit with because they want to always they get comfortable. It's called recency bias. But they get comfortable with certain names and they always want to trade those names. And then they miss kind of the next wave of things that came up, right? So people who trade, were very into Apple when it was a massive growth company are still probably holding Apple, even though it's really done nothing for a long time. And yeah, so I always look at it kind of like what's next. And like, yeah, a lot of these names I hadn't even heard of. I'm just looking at my list of new all-time highs here, but F First Cash Holdings, ITRI, like I haven't heard. I've got so many other things, I guess, to research is the way to sum that up.
Yeah, I'm with you, 100%. What else we got? We got Salesforce CEO Benoit. Is that how you say that? Said AI now handles 30 to 50% of company workflows from code to customer support. I haven't looked at this CRM chart in a long time. Where we at? Where we at?
A bit choppy.
It is a bit choppy, kind of just slow in this range, but holding up well. It looks like we just started this range a little bit. We could kind of chop around this a bit longer, I think.
Which is interesting because that seems like a very bullish headline, right? It means,
Yeah,
right? Again, there's the two scenarios with AI. There's the doomer scenario, which means we're all out of jobs and the whole world's doomed, or we are going to be so much more productive that we're going to be able to get so much more done. So with something like Salesforce, you'd think it would hopefully be the latter, where okay, maybe they're not hiring as aggressively as they do, but every employee they hire should generate the company way more revenue, because if you hired an employee before and you sat him in a desk and put him to work, maybe he makes, you know double what you pay him, right? You pay him 100 grand, he makes you 200 grand. You sit an employee down and you arm him with a really powerful AI. Maybe you pay him 100 grand, he makes 300 grand. This is kind of the leverage aspect of AI that people are looking at, and you would hope, right, that this would be kind of bullish for this name. But yeah, this is another one of these still really stuck between this range, unable to get going, kind of on either side.
Yeah, she is stuck. We got Google and Pearson inked a multi-year AI and education partnership, deploying Gemini and Learn LM in classrooms and training teachers in real-time personalization. That's actually really cool. I didn't even know that came out.
Yeah,
Um,
no, that's I use AI for all my
absolutely.
my learning now. Anytime I need to, we're researching like a new car. We're gonna buy a new car, and of course, the wife wants like the largest, most obnoxious SUV that you can possibly imagine.
That's the
Um,
mom mobile right there.
yes, she's like, she will walk by an SUV and go, no, it's not big enough. I want to be able to put my entire house, 2 kids, 2 dogs, the fridge, whatever I need, it has to go in this thing. But just, for like, I don't know anything about cars. I'm not a car guy. So I can just go and say, okay, tell me about, compare all these different models. Tell me about the different ones, which one of the safeties, which have the cameras, because you can't actually see around the thing. It's so huge, it needs cameras. So I could definitely see a world where, my kids who are young now, instead of coming home and struggling with learning things, they just have an AI assistant, right? It's like, okay, it's time to do your homework. Sit down, and we sit down together, and it teaches. So yeah, this seems like a no-brainer to me.
Yeah, what else we got? I know we had Rocket Lab and ASTS is another one. The whole space
Mhm.
trade has been really good. Just hit all-time highs on Rocket Lab.
I
Very
always bring you
yeah,
guys weird. I probably gave you this one before, but these weird or ETFs, UFO, which is again hilarious name.
yes,
Um, it's a
love that.
great ETF for kind of tracking all these. This particular ETF, not quite at all time highs because it's got some things lagging in it, but really nice looking cup and handle. Yeah, Rocket Lab looks great. Um, yeah, that's a really nice looking chart there on Rocket Lab.
I wanted to actually get a bit of a projection on where Rocket Lab can go because all-time highs, of course, price discovery mode, and it can be a little tough. We did just hit a big first target for the projection that I have coming off those lows that we did on the weekly, but the last target that this has is that 43.42. So I'm interested to see if we get up there into those 40s. I mean, I have no doubt Rocket Lab has the momentum to do it, especially recently, at least to that $40. But I'll be watching that like 43.50 area, see if we get up there. It's kind of obviously this is like a rough projection um, using standard deviation, but that's really all you can do. I mean, Michael, how are you finding price targets when we're in price discovery mode like this? I feel like the best thing you can do is fibs,
Yeah.
standard deviation, and I mean, watch out for every whole number you're hitting, right? Like, what else can you really do besides that?
That's it. And I like the fib. And again, I'm not a big fib guy that, they're magic numbers or anything like that. But, for Rocket Lab, for example, as a nice round tool, it kind of makes sense. So if you take this pullback that happened in Rocket Lab, and you just project this out and you put a 1618, essentially just means that this rally right here is going to be roughly from the breakout point, um, 2/3 of what this pullback was as well. That's one way to do it that I know a lot of people like, and I use as well. Because again, you can't really project it. And the other is the old school way, which is just measuring the height of the pullback and just saying, well, what if we just do that from the breakout? Right. So, we pulled back from $32 down to 17. So then if you apply that kind of 50% ish move up from $30, right, you get up to 60. So just drawing out what this area was, and this pullback as well. Right. So I own this company, Outlet, which, because I've given them hundreds of dollars, like a heart rate oxygen monitor for babies. I've been watching this one all the way from this price, and I finally got involved kind of somewhere in the fives, just because this thing, right, is an absolute stinker its whole time. And then that's the kind of way I do the same thing, where you just take the width of the base, right? You just draw a trend line on the width of the base, And then you just take that and you apply that to the breakout point. And that's just a pretty simple kind of way to do a target. And you don't have to get too fancy with it. I've always just liked that as a little bit of an interesting metric to say, okay, if this particular base, if it's $10, right? You just apply that to the breakout and you say, okay, I'm looking for $10 for a breakout. It's a way to make sure that if you're using that base as your stop loss, that you're shooting for a 1-to-1 risk reward ratio. So if you're right over half the time, then over the length of your career, you'll end up making money.
Yep, good stuff. I like it. I mean, you keep it simple. You get an idea of where it can go, right?
Mm-hmm.
And you take it day by day. What else we got? We got Core Scientific up 30%, exploded after reports of CoreWeave acquisition talks heating up again. Jeez, let's look at
I
that.
haven't even heard of this cores. Oh yeah, I've probably traded this guy before.
Look at
Wow.
her.
So this would be another one to potentially do the same thing to, because it looks like it's making a new move to all-time high. You could take the same fib and just go from top to bottom and say, okay, well, if this move, the breakout is at least 2/3 of whatever that move was, that gets you up to 27. That's a pretty good range. And then if you do it the other way, again, it's just personal preference. You just draw the trend line and then apply that to the breakout. It's going to put you a little bit higher. So that's basically just saying a 1-to-1 as opposed to 2/3 gets you up to 45. So a nice looking chart, just a nice solid uptrend. A little bit of pullback. Now it's continuing.
Yeah, looking strong.
Good look.
Something that's not looking so strong. Tesla slid slightly after executive Ahmed Afshar departed amid slumping EV sales and robotaxi uncertainty. So that's a little rough. I know we had two people leave yesterday from Tesla. So I mean, not great, but really, in all seriousness, Tesla, we on a daily chart, we had that consolidation from March and May that we just really weren't doing much in. We finally broke out of that. We've retested that breakout. We're holding. And then on a lower time frame, we've essentially done the same thing right where we're at right now. We've had we have this like lower time. If you bump down the time frame to like an hourly, it looks exactly the same as that daily, and you have this kind of choppiness. We just broke above, and now we're kind of just back testing that again. So I'm interested to see if we hold, try and get back to these range highs. But Tesla's just quiet right now with the market doing what it's doing.
Well, and I always look, right? This candle, it's always good to find significant candles and significant events in your stocks. And I think when the CEO called the president of the United States a pedophile, that's a significant event that you can anchor to. So we're above all that. Like he got in a fight, the richest man in the world and the most powerful man in the world got in a fight, and the stock price is up from that. That's got to be a win, right? So I look at this candle. That's why I've got all this kind of highlighted area here. Could just be replaced by kind of highlighting this particular candle right here, where if we're above this zone, then I'm going to be bullish Tesla. If we're below this zone, I'm going to be worried. And that's kind of a really simple way to boil down the way I look at Teslas, because with such a huge spectacle, a massive fight like that, this was what, like a 17% single day decline in Tesla. If we can hold above that zone, if we can at least hold above the low of that candle, then I think that's a good thing. It means that he's better off than the fight that happened. So, and then long term, right? We've all heard the thing, right? You're not betting on the cars in Tesla anymore. You're betting now on the robots. But is that one of those things we're still waiting for full self-driving? So is that the robots are coming any day now is going to be like 10 years? And how long are people going to hold on until they realize that he promises things way faster than they end up happening?
Yeah, it's very true. Very true. That's why we got to hold the horses a little bit when we hear stuff come out, take it with a grain of salt. What else we got? We got Meta reportedly circling Play AI, a voice AI startup to level up its natural language capabilities for consumer products. That could be cool. I know Meta's nearing those all-time highs. I wonder if we're hitting them or getting closer today. Oh, we're right there. We might get that today, folks.
Yeah, 740 for the all-time highs. We're at like 730, which that's a drop. That's a one good 15-minute candle and you're there.
Yeah.
No, it's
same
interesting.
thing, right? Got to get the projections and see how far this thing can go above all-time highs. Same thing as the other names.
Well, and from kind of a more fundamental place, it's interesting because Meta has all of the users. So if it gets an AI that's good, yeah, so the projection there is like 900. So at that point, you're probably hitting 1,000. And if you're breaking 1,000, you're probably hitting 1,200. So that's almost a double from here. And like they're I haven't played with their AI at all, but they've got the users, right? Between Facebook and Instagram and WhatsApp and all that kind of stuff. If they have an AI that's good and they want those things, then great. It's you have the eyes, and I think that's part of it. For me, when it comes to, I have like no AI brand loyalty at all. As someone who uses it all day, first thing I open up now on my computer when I go in the morning, and I'm using it all day, every day for a whole bunch of stuff. I use ChatGPT right now, but I'll use Claude, I'll use whatever. It doesn't matter. So I'm not a big Facebook guy. For the people that are, if you're on Instagram anyway, and they already have that stuff there, why not use it, right?
Yeah, definitely. We had GDP come out yesterday, showed a 0.5% quarter one contraction in the final revision, raising questions about U.S. Economic momentum. We also had PCE come out this morning. Looks like the actual was zero point 0.2, forecast was 0.1, so slightly higher there. Previous was 0.1. Not too much of a change there. Do you find any value in those numbers, Michael?
Never.
Yeah,
Never. They're
same.
just so, especially in the world of today, they're so backward looking. So you're going to get inflation numbers that include tariffs when they were on, and now they're saying there's a deal signed with China. So then right, so everything is just so far behind that you're not looking at anything that's a decent metric at all for what the health of the economy is. It's saying, okay, um, they revised the old one. So they're even tweaking now. Not only is that old data, but they're going back to the old data and then they're tweaking the old data. It's just so far behind that I don't, right? The market's smarter than that, right? It doesn't care at that point. So
I mean, I would say tariff news and like stuff like that, it can always be a little surprising. But even then, majority of the time when I'm looking at the charts, I'm like, the chart literally told us before any of this news came out. But
mhm.
definitely with the like GDP data, NFP data, any of this morning data, unemployment claims, more times than not, even yesterday, it was beautiful. We had pending home sales come out, I think it was. I was in a trade long, and like a lot of people are like, "Oh, you're gonna get in a trade before this data comes out? Isn't that like super risky?" I'm like,
Mhm.
"Absolutely, I'm gonna get in a trade." All news does is push us towards the already existing drawn liquidity that the market was going towards in the first place. So as long as I'm confident in where I think the market's going and I have conviction, absolutely happy to be in a position going into market open, going into some of these data points because I only expect it to take me to my TP quicker. Right. And if I'm wrong, I'm wrong. I get stopped. We have risk management, all good. But if I'm right, I'm gonna just get my TP way faster, right? And that volatility influx is just gonna push me to where I want to go faster. And so, just majority of the time, I notice that news is not changing the direction of the market; it's only pushing it where it wanted to go. So,
You're gonna be getting your CMT soon. I
let's
can
go,
see, but
baby.
that's
Let's go.
a yeah, that's a taught a technical premise that surprises generally happen in the direction of the trend, which means they're not really true surprises. You got to think about it when it comes to something like the inflation number. You have Goldman Sachs, and they have an army of uh, very highly paid analysts, interns. You better believe they're using all the AI in the world, and they are estimating what inflation will be every second based off of the commodities, based off of on the ground, like going to grocery stores, things like that. You don't think that they have a really good understanding of what the inflation number is going to be before it comes out, and that it's already then priced into the market in some degree because they've already acted on it. So if they think inflation is going to be high and that's going to push the market down, well, they've been shorting for the week before the number, right? They're not shorting at the number; they're shorting that whole week before the number happens. So yeah, they already know what's happening. It's not because any sort of tinfoil hat, like they're being told early. They're doing the work. They're doing the research. They have the capabilities, they've got the manpower, and they've got the capital to know what inflation is going to be well before we do. So yeah, that's why things, in my opinion, show up in price first, because they've already been acting on the knowledge that they have. So if oil spiked, well, they know that inflation is going to be higher in the next little bit, so they're prepping for the numbers before these things happen.
Definitely. There's that bell. Open the market up. But yeah, like you said, the market's smarter than that, right? And it's always reacting to these things and has things. I like to always say, like, everything is always priced in. Essentially, I mean, it's always priced in. Every bit of news that's coming out, everything. Do you really think we're the first ones that are knowing about anything that's happening in the market? Of course not. We're the last to know, right?
Yep.
And so that's why any headline, I mean, right, I could care less. Don't care, right? Show me price.
Right. And if it's a surprise in one way or another, right, there'll be movement based off it. But the question always should be, is there any edge in that? Is there anything that you can do to predict that movement? If not, then ignore it. Right? That's the way I look at the market anyway. If there's no edge in me knowing something, I don't want to know it. I don't care about it. It doesn't affect me in any way, shape, or form. So when we talk about edge, we talk about what is it that you can do faster or better than Goldman Sachs, JP Morgan, Morgan Stanley, right? All the big guys out there with, people they're paying $1 million a year to be able to do this, and, systems to understand that, hey, this is, this is one of those things that the systems can figure it out faster, right? An AI can read a news headline and place a trade off it way faster than any human. So you might as well just ignore it because you don't have edge on it anymore.
Yeah, agreed. And I mean, that's our job, right? We have to be playing probabilities and have some sort of edge. So if there is none, don't care what's happening. I don't want to take part in it.
Yeah. So just doing a quick look at the heat map here.
Go for it. Let's hear it.
Mostly bullish, right? So the larger the box, just to tell people, the larger the box, the larger market cap, so the more effect it will have on the Qs and all that stuff. The more green the box, right? The bigger the up move or down move that has happened will occur. So that's just what we're looking for there. We're looking for, again, big moves up, big move downs, what's moving around, and mostly green, a little bit of red here or there, but little tiny red. And with the big guys being green, then again, a nice upward look there on the market. So opening few minutes, not a lot's happening.
Pretty quiet.
So
coming down, we're taking out some of these. We took out London lows on NQ. We got Asia lows resting below us. I had a great week. I'm not looking to press it too hard today, but obviously if I get something clean, I'm happy to take it. I'm looking more to the bull side right now, just because we're initially trying to take out these overnight lows and we have untapped overnight highs. So would like to see some sort of setup off these Asia or London lows to get back to that London high at 788 on NQ, but we'll see what happens. Again, I'm not going to press it too hard this morning. I had a great week and I don't want to really fumble that into the weekend. So anything I do take probably be less risk for sure. And just keep it kind of chill for the day.
Yeah, and all-time highs, and I always say this. Freaking dog always in and out, in and out. The more a level is watched, the more important that level will be, and the more BS will happen around that level. If there's a clean level in one way or another, everyone will watch it, right? So it's why I think you see a lot of games around like a 200-day moving average or things like this, because if everyone in the world is watching a level, then there's going to be people who are buying at that level and people that are selling at that level and people that are shorting at that level, and all of that action going on at that zone creates a lot of crap that you've got to have to deal with. So it makes sense that when we get to that level, it's never clean. So that's why I think there is no more watched level that, again, everybody, regardless whether you're a technician or a fundamental dude or whatever, is watching, then all-time highs. So, and I'm not just talking like a day of nonsense. I'm talking a while, and you can just go back in history. Like if you look at, so right here was the breakout of the 2022 bull market, right in this area. You can see weeks of just kind of choppy action. If you go back to what happened at the end of 2020, right here, this was the end of the 2020 bear market when we made new all-time highs. More choppy, crazy action. And then, because there's a lot of bear markets recently, the 2019 bear market, you can see here months of just sideways consolidation and chop back and forth. So even if you just go back in the most recent bear markets, generally speaking, not clean at all, right? A mess on both sides of things. So just beware, right? Be ready for a lot of people. I think I know are super hyped. New all-time highs. It's great. Let's buy it, and rip, and everything will be great. Generally speaking, not the way it works. Not that easy.
Yeah, not that easy. Let's see. Fed's official Barkin warned tariffs are heating inflation, though not to COVID era extremes. We got Trump's July 4th deadline for the big, beautiful bill
Yes.
that with chatter intensifying about who might replace Jerome Powell at the Fed. Oof. That's rough.
If I was him, man, I'd be happy. Get me out of here,
Yeah,
right?
seriously.
I want to play with my little economic stuff. I want to, run my models. I don't want to have to fight the president. This isn't what I signed up for.
Yeah.
He just wants to do economist stuff. The model is saying this. I'm going to set interest rates there. Leave me alone.
Yeah. Probably a little bit of relief there from Powell.
Yeah.
He can wear whatever color tie he wants now.
Yes, I can leave. I can walk away. It'll be hopefully I'll be remembered as the one that saved us from inflation, and try to get a legacy out of there. But yeah, just get me out. Whoever is going to replace him, we know is going to drop interest rates, because he's been told by his boss to drop interest rates. So
nice pop from the market here. Little slow consolidation open here, but trying to get moving to the upside. ES looking a little bit stronger this morning than NQ.
Yeah, and I think that is because if we go to the heat map here, you can see participation in retail. So it's always good to look at the sectors that are moving. Amazon, again, it's one of those. Is Amazon retail? I think over half of its income comes from like cloud services and things. But with this and with finance actually moving okay, both of those things are looking pretty good. So both those things are going to help propel the market just a little bit more. And with tech, you have Tesla still down a bit. That's going to be weighing down on the Qs. Palantir down 3%. I think that's in the Qs as well. I can just go check right here. NASDAQ 100. Yeah, Palantir, app, and Tesla. These are all going to be weighing down the Qs here.
Yeah.
And Palantir 3%. Any idea what's going on there? I just asked because I own a bunch of Palantir.
I have no idea, but
it's funny.
Whoa.
Well, you look down at 3%, then you look at the chart.
I know. Then you look at the daily, and
you're like, oh, this is 3% is just a normal, run of the mill day for Palantir, up or down 3%.
Yeah. See, Circle tried to pull back a bit. It's seeming like people are trying to buy the dip on Circle so far. But it did have a nice, what was that, 33.78, almost 34% dip from the highs.
Yep.
Oh no, this thing is weird. I'm not on board with the new IPOs like this, but I get why people are, especially with this one. I just
they're momentum things, and until lockups are removed, they're actually relatively low float, it's what makes them move as well. So low float traders end up loving these things, because this isn't a low float company, but until the lockups are removed, it is a low float company. And generally speaking, once the lockups are removed, that's when it just becomes a normal company and stops trading so erratically, because there's just more liquidity, more supply and demand, more things to deal with. But Circle and Coin, I think the two of those things are going to be, man. yeah. I'm in. Here's I drew at the trade here in quite a bit here. these are going to move in tandem, I think. So I think you're going to see a lot of algorithms starting to play Coinbase versus Circle and back and forth, because they seem to kind of live or die together just a little bit, right? If Circle stops making money, then Coinbase isn't going to, right? Circle pays a lot of money to Coinbase, so Circle needs to make money and then pay money to Coinbase, and right, a lot of these things that they're moving and they're pushing around together.
Yeah, Coinbase is just, we're almost at those all-time highs now.
Yeah.
Crazy. I didn't know. I didn't think that Coinbase was going to do it that fast, but wow.
Well, and
this is
the idea that right, and this is why I'm in it. It's just, this looks very much typical cup and handle style play, right?
Yeah.
And cup and handle play like that is just, to me, as someone, again, I'm mostly a systematic trader, the discretionary trades I take are pretty much just this kind of type of look where, right, show me something that just got absolutely clobbered, is right back up at highs. I'm not guessing at the bottom down here. I'll take my little chunk out of it here. If I sell at all-time highs, that's like a 40% gain from where I got in. I'll take that all day,
Absolutely.
every day.
Yeah.
Someone else can make the 10x, and good for them. I'm happy. Speaking of a nice cup and handle play,
what do we got?
Fartcoin.
Oh my gosh. this chart, man. Oh,
listen,
it looks so good.
It does look, and I have to trade it because of it. I took an initial trade, so I still have some from 56 cents here, where it just looked like a little mini cup and handle. Took some out when it like tripled, and then I bought back, and I'm going to look to buy more on the breakout. Again, it's stupid. It makes no sense. I read somewhere that somewhere in the US now you can use Fartcoin as like a collateral on a mortgage. Was that, I don't know if that was a meme or not.
If that's real.
Somebody, let me see if I can find the tweet.
What is our world coming to, Michael Nauss?
So this is from Polymarket. U.S. Director of Federal Housing orders mortgage providers to accept Fartcoin when assessing creditworthiness, which is just like, and I'm reading the comments and it's Polymarket, right? So it's not just some random Twitter account, and they're saying, yes, it's a real headline. And
wow.
I'm speechless. I have no idea. I went to school for finance. I worked right on Wall Street with hedge funds. And now you can buy a house with Fartcoin. So that's it. That's the world. That's where we're living. And
that is where we're living. It's a crazy world, man.
This is the simulation we're plugged into.
It's crazy, man. Crazy. That should not be the case with Fartcoin, but hey, like you say, if Fartcoin looks that good, this market's got to be all right.
Well, and
this market's got to be all right.
And that's why I have it on my screen. That's why I watch it. I've been saying this now for years, is that, if you were really worried about your job, right? You were really worried about kind of like the health of the economy, and that you're going to get fired, and that, how are you going to feed your kids? Are you going to sell your Apple first, or are you going to sell your Fartcoin first? I'd hope in even a remotely rational world that the Fartcoin goes first to feed the kids. So this is a really good gauge, I think, of risk on, risk off, because I'll be interested in your I had a little debate, nice little healthy debate with a fellow CMT the other day, because I've been using Bitcoin for the longest time as a risk off, risk on metric. And he's saying that he doesn't think that that's the case anymore, and that essentially what has happened is that Bitcoin has become a digital gold, a safe haven asset, whatever you'd like to call it, and thinks that I should look at that. And what he thinks I should use instead in the crypto space for a risk on, risk off is the Ethereum over Bitcoin chart. And the idea is that if Bitcoin is outperforming, the whole digital gold thing is outperforming. And if Ethereum's outperforming, then people are a little more risk on. But I'm not opposed to it, but I'm it's an interesting way to remove something that I've used for so long as a risk asset and try to put it in a bucket as something like that, right?
Yeah, I don't hate the thoughts there because it does make sense to me when you start to see how Bitcoin has been trading, especially, I mean, as soon as we hit 100K, right now we have all this interest from like institutions and all these big dogs. And so I do think that kind of changes the game a little bit. I mean, I hear what he's saying. It at least to me, it does feel like it's slowly becoming more of a safe haven on that higher time frame, especially. But I don't think using it as a risk on or risk off kind of measurement is completely gone yet. You know what I mean? I think there's still opportunity for that. But I like the idea of using the ETH over Bitcoin chart. To be honest, I
Mm.
don't hate that idea at all. I think that's totally fine. So
He said ETH over Bit or Solana over Bitcoin were
I
both
mean, because it makes
interesting.
sense if people are truly risk on, they're probably putting some money into these. Whereas Bitcoin, I definitely feel like I mean, I'll buy Bitcoin no matter what. Personally, I'll buy Bitcoin like whether the economy is doing good or not, or where we're at, whatever. And so I definitely feel like it's more of a safe haven there, rather than I'm not just gonna go out and buy Sol. I'll only buy if I'm gonna do that. I'm gonna do it when I think a time for risk on is good.
Yeah, and that again, I kind of liked it because that was part of his thinking is that as soon as Bitcoin got to the point where it is an allocation of people's portfolios that like their financial advisor is telling them, because a lot more financial advisors saying, okay, listen, take 1% to 5% of your portfolio, throw it in Bitcoin. If Bitcoin goes to zero, you're down 1%, big whoopee. If Bitcoin, quintuples, you're going to make 5-6% on it. And you're going to have a nice, healthy over time, a nice, healthy allocation to, nice, healthy allocation to crypto. And that's a good hedge or a good kind of kicker to a portfolio. Is the way a lot of people are looking at it. And he said, as soon as it entered that realm, it stopped being a really speculative asset. It's going to be like the SPY, where part of the reason that the SPY, generally speaking, doesn't tank 40-50% anymore like it did back in 2008 is because you just have every 2 weeks, as long as people have jobs, every 2 weeks you have millions of Americans just buying and allocating into the S&P 500 just over and over and over again. And as long as that completely relentless bid remains, it's not going to go down. So that's the idea anyway.
Yeah, I'm with you. And Q, nice little chug up here. Not too much momentum or efficiency in price right now, in my opinion, but trying to get the move up, retesting some big spots that we had in pre-market. So I'm interested to see if we want to go hit these overnight highs at 788 or end up staying below them and get a little more downside today. But I don't know. I'm not seeing a whole lot of opportunity for me quite yet. So
Well, and
I
I
don't know if
wouldn't
I'll take it in.
expect too much. We've got a little bit on the consumer sentiment going on, but then we don't really have anything for the rest of the day. So there wasn't a huge amount of earnings. I think Nike was what the most noticeable earnings that we saw. So with no economic numbers and no earnings and a Friday, and it's becoming July, right? I think it's good to do a caveat out there to traders watching this that might be new and just go, things get really choppy during the summers because everyone just takes time off, right? And then there's less traders on the desk. I don't know if it'll be the same with the current administration, right? There might be craziness all the time. And what I think hurts more traders than anything is just trying to deal with the chop as opposed to losing money. Right. I think there's less traders that lose money in crazy environments like this and more traders that lose money in dull environments like this because people overtrade. They'll, look for trades that aren't happening. They'll look for things that just aren't occurring. And they just get kind of nickeled and dimed and chopped back up. And that causes all kinds of emotions when it comes to rage about, that kind of thing. So that's why over trading, I think, is just the devil. So, make sure if you are trading during Friday afternoons in the summer, you understand not to expect too much in the way of movement.
You always end up like trading the chop, You like blow into your prop accounts, trading the chop, and then right when you blow it, that's when we finally start to take off,
Yeah.
like move, right? And that's why in those ranges too, when we know the market is consistently chopping more than it's trending and impulsively moving like that.
Hmm.
I mean, we got to try and put ourselves in those positions of, I mean, obviously we can try and trade the chop, but got to have that risk management because when you finally get going, right, you're going to get some big moves that are going to make back all of those potential losses that you took.
Yeah.
And but you got to be able to hold out for that, right? If you can't survive until that comes, it's an issue. So
Well, yeah, and look at the VIX, right? And this is why I know a whole bunch of traders. Again, I'm a systematic trader by trade, right? I'm a quant. I build models. I have robots. They trade for me, that kind of thing. I know a lot of other guys that are like me that essentially have models in which if the VIX is right in the 15, 14 area or below, they turn off their day trading bots because they just don't, there's not that intraday volatility that makes it that there's a real extreme edge. Of course, you can still make money in any VIX environment. It's just you'll generally do a little less, right? So you either need to size up more to offset it, or you just kind of understand that there are times to really swing for the fences and there's times to chill out. And when the VIX is very low, it's probably one of the times to chill out. When the VIX is very high, for again specifically day trading, that's the time where you can really make some wicked moves. Like day traders making 10% on their money in a single day because Trump said something is just absolutely wild. So this is always a really good guide as well, right? If the VIX is high, so there's a lot of people out there who just they draw a line here. They say if the VIX is above X line, I'm a day trader. If it's below, if it's between two areas, I'm a swing trader. And if it's really, really down in the dumps, then I'm just an investor. Because if your VIX has like a 12 handle on it, it just means the market isn't moving at all. So you just hold whatever you got. You're probably in a nice, chill, sweet uptrend that you want to do nothing with.
yeah, I'm with you. Dixie, Dixie dropping off. Let's see what we got. Do we have any big individual names catching some crazy moves so far? BA up almost 2%. She's trying. Um, AMD is still trying to hold up strength, but coming in a bit. It's made some big moves lately though, so not surprised there. You got any AMD trades going on right now, Michael?
No, again, the semiconductor space isn't super interesting. I missed this breakout that I was looking at of just this massive downtrend line that happened in there. I kind of missed that. It's been a slow grind ever since then. Again, a lot of the things I'm doing are pretty weird, right? Companies I've never heard of before. These ones that are breaking new all-time highs, like that First Cash yeah, this one. Right, I'm looking at this one on potential pullback here because it has just this nice area at all-time highs. It's one of those. The way I look at it is now that we are at all-time highs, it becomes very easy to see where the relative strength and where the relative weakness is. If we are not at all-time highs for your stock, then it is relatively weak to the overall market. And if you are at all-time highs and you got there first, then you're relatively strong. And just a very simple tenet of technical analysis and something that I think that everybody should really pay attention to because there's just so much study and math and successful traders who have used it for eons. Is just that concept of relative strength, relative weakness, right? Buy the strongest stuff, stay away from the weak junk. Eventually, if you think this company is going to become a strong company, then it will show up in the relative strength. It will do well. So yeah, I'm just focused. Give me a big list of names, which I have here at all-time highs or near all-time highs, and then I'm just going to spend the weekend going through that. There's a couple hundred to go through, and just kind of build my list based off of what's there, what's near all-time highs.
Yeah, it's perfect stuff. I love it. Looks like this market is trying to get back to these overnight highs. There's a little bit of some opportunity at these lows, but just sloppy. Didn't see really what I wanted to see to put any risk on the Friday. Again, I've done very well this week, so I'm not really trying to press it too hard unless I have a clear opportunity with good risk. But
Well, I think
I'd expect this market to push towards these overnight highs right now. At least on ES, it's looking stronger there.
I
So,
think
Michael.
psychologically, you just got to keep an eye. So right on the SPY anyway, 613.23. Right, that was the all-time high for this whole period of time. So there's going to be a lot of kind of systems and algos and things like that that are watching that particular zone. And if that holds, then great. We're probably going to drift higher over time. Below that zone, probably going to play a lot of those games that I showed you guys that are bound to happen around this price. And that's the biggest thing, takeaway I want people to have is just go back, take you 10 minutes this weekend and go back on a weekly chart of the SPY or the Qs and look at every time there's a bear market, right? We can all, well, I'm an old man, so I can remember all of them. There's right the dot-com collapsed. We got 2008. There was one in 2016, 2019, 2020, 2022, and 2025. There's all those recent bear markets. And just go in and look at the chart. What happened after we hit new all-time high? This ability to study history, I think, is just so important for traders. Like when the US got involved in that Iran war on the weekend, and Bitcoin just fell out of bed for a second, and Fartcoin fell out of bed for a second. I'm sitting around a fire with my buddies having beers, and I just go to ChatGPT and I say, okay, give me 5 dates that the US has gotten involved in a Middle Eastern conflict over the last couple of years. And it goes, here you go. And it gives you what happened and the date. And then from there, I just went to the chart again on my phone on TradingView. Each time I just went to that date and said, well, is it disastrous when this happens or is it good? And in most cases, the market rallied the next day. So then I just went over to my Kraken account and I bought a bunch of Bitcoin and I bought a bunch of Fartcoin. And, the Fartcoin rallied like 25% over the next 2 days. So just go back and study history. Doesn't mean it's going to happen this time, right? There's a big chance that it doesn't. But the amount of people that don't do that is just shocking to me, that they don't go back and say, well, let me see what happened the last time XYZ occurred. This is an easy one. What happens after a bear market and then that turns, you break new highs? What happens over the next week or month or year? And you get a pretty good understanding of what we're in for, which again, I think is chop.
Yeah, we just saw ES take out those overnight highs I was talking about. NQ's lagging it a bit, so it looks like ES wants to stay a bit stronger. And we'll see if NQ wants to take out these London highs as well. But some beautiful moves to the upside. If you were playing ES at all this morning, you got that full move of the range. So beautiful moves this morning. I'm not taking any risk at the moment. Again, like I said, I've taken plenty of risks this week, and I don't really want to press it too hard. But some beautiful moves. Even with the volatility kind of falling off, still beautiful setups in this market. So I hope that sticks around, even if volatility wants to drain out a little bit. But yeah, great stuff this morning.
Swear to God, if the dog's in, the dog needs to get out. If the dog's out, the dog needs to get in. I need a doggy door for my office at this point. It's insanity.
I'd be a little cautious on more longs right now, unless we see NQ really pick up some more momentum to get over those London highs. But again, phenomenal morning so far.
Yeah, and that I couldn't agree more. Right? Again, if I'm right and we are going to get chop, then we just need to understand that it's in both directions. It means you chop higher, it means you chop lower, and just make sure. Again, I don't think a afternoon on not quite July, but almost July is the time to really be swinging for the fences, right? I don't think it's the time to really go crazy.
Agreed. Well, always a great morning with you, Michael Nauss. I appreciate
Always
the
good
audience
time.
always hopping on. Make sure you guys are subscribing and liking on the Stock Twits YouTube channel. We will be back next week, and of course, we have the morning show happening every day with Shy and Katie. So make sure you guys are tuning into that. But I think we're gonna wrap it up for the day. Everybody trade safe. Enjoy the weekend. It's going to be a nice weekend. I know next week we have a little bit of a short day Thursday, and then we're closed Friday for July 4th. So maybe a little bit of a weirder week. I think it's a short day. Double check me on that. It might not be. Double check me on that. I think it's a half day on Thursday, but maybe I'm
awesome.
wrong. Maybe I'm wrong.
Right? Again, I'm Canadian, so I have no idea.
I might be wrong. Double check that for sure if you're in the audience, and we'll see. But yeah, should be an interesting week next week. So I know we got more data coming out, more red folder data. So we'll see how that goes and everything. But everybody enjoy the week, enjoy the day, trade safe. Don't give it all up on a Friday. It's the worst thing to do. That's exactly why I'm being picky this morning and not putting on too much risk. But look at this market, NQ pushing higher. trying to tap those London highs. So love to see it. Happy all-time highs. We will see you guys next week. Have a good day.
ya.
Enjoy.